I did a video on Estee Lauder around 2 months ago, and I said the stock was very overpriced for me, and I did recommend an alternative, which was Capri Holding. And in this period, Estee Lauder went to $156 per share. I made the video when it was around $190. A lot of people told me it's never going to $160, which was my fair target, but it did actually go below that, and now it's sitting at $156 per share. And the stock that I recommended, which was actually Capri Holding, was actually up more than 53% because they're getting acquired from Tapestry Holding because the company was just extremely undervalued. So I pretty much nailed it in this video. I don't always nail everything I talk about. Sometimes I talk about stocks that go up a lot. Sometimes they don't do well. This is just the way it is. We can't be right all the time. But this video pretty much nailed it on Estee Lauder, and it also nailed it on Capri Holding. And in this video, I'm going to give you my update on Estee Lauder and try to determine if the company now is finally some kind of a good buying opportunity for a high quality company, or maybe it's not. I'm gonna make the video a little bit shorter than usual because I talked about the details in my previous video. But most of you are familiar with Estee Lauder. They own a lot of popular brands, like Tom Ford, Tommy Hilfiger, Michael Kors. I mean, most of you are familiar with such brands, the MAC, kind of makeup for women, and a lot of other things. So it's a pretty popular brand. And if we look at their latest kind of earnings report, the full year net sales, they decreased 10%, EPS decreased 57% for fiscal year, organic net sales decreased 6%. So this year has been pretty much horrible for Estee Lauder due to their failure in China, a lot of other places, high inventories, much lower prices, much lower demand. Everything that could go wrong went wrong with Estee Lauder, which is why the stock is sitting around $156 per share at the same price it was trading at in February of 2019. So there's a lot of bad news that's most likely priced in within the company. But again, it wasn't a good year at all. But things are starting to improve, and if we look at the fourth quarter, they achieved net sales growth, positive growth finally in the fourth quarter. And this is a major improvement for Estee Lauder because if you look at their kind of earnings before, they were actually declining in sales and increasing in cost of sales. This is something I was highlighting, but now at least they increased sales. It's only 1% increase, but it's still some kind of a good increase in general, although cost of sales are up much more. They're up over 13%. It's very bad. Ugly gross margins were 71%, now 68%, and before they used to be as high as 82%. So this is a massive disappointment, but the company is turning around. It's starting, to grow sales again, even if it's just 1%. And this is huge in terms of investor sentiment, and this is how these trends typically begin. They begin with a small improvement from losing to, gaining kind of revenues, and this is how the trend could potentially pick up in terms of revenue growth. And the guidance wasn't the best at all. If you look at their next 3 months or next quarter, they expect another 10 to 12% decline, pretty horrible. The next 12 months, they expect an increase of 5 to 7%. Now, I'm not sure if I actually believe that. I mean, I don't know how they're gonna go from, gaining 1% to losing another 10 to 12% to then making around 5 to 7%. This is a massive swing. It's not predictable at all. I don't have much confidence in Estee Lauder's guidance, although I'm going to use it for my own valuation model. But I personally don't believe those numbers. But if they can actually pull this off, this would be one of the best turnarounds in history, pretty much, of how the company has been poorly managed lately, especially with cost of sales, with pretty bad investment. So I would be very surprised if this actually ends up happening. But if we look at the balance sheet, it's not bad at all. They have $4 billion of cash. I'm going to mainly take a look at inventories. They still face a problem with inventories, pretty close to $3 billion of inventories, which is pretty much at the same level as it was in 2022, which is not bad at all. It has actually been improving. It was pretty high at the start of the year, and now it has improved a little bit, but it's still historically, elevated in my opinion. And if we look at where Estee Lauder is actually trading at right now, despite this massive, drawdown within the stock, Estee Lauder is still trading around 35 times earnings. Now, we cannot value this company like we value, something like, I don't know, AT&T or Verizon. This is a kind of a higher quality company, higher margins, higher growth, although their margins have been deteriorating. But now it's sitting around 34 times earnings, and 34 times earnings is much, much higher than, the historical average, although it's well below the last few years, but it has been much higher than, pre-COVID kind of numbers. Pre-COVID, Estee Lauder's mean PE ratio was around 32 times earnings. Now it's still sitting at 35 times earnings, which is a massive improvement because it was trading at 42 times earnings when I made my last video. So I see a lot of improvements with the company. The stock is getting more and more kind of reasonably priced, although I still prefer other companies over Estee Lauder at such valuation. But if you want to own it, I believe the valuation is starting to get a little bit better. But if we look at my own valuation model, I put in 7% revenue growth from 2023 to 2027. This might be on the optimistic side, just using the guidance of organic, gap that Estee Lauder actually has. So I put in 7%, and the analysts are expecting 8 to 10%. So I think 7% is very, very fair. Net income margin, this is where I'm struggling with because I'm putting here 13%, which again is a very optimistic scenario. 13% was pretty much the historical average before 2020. After 2020, it went to 14%, but now it's only around 8%. If I use 8%, the company is going to look extremely overvalued, but I cannot use 8% because this is going to be one of their worst years. It's not going to always be like that. It's most likely going to revert to the historical average of between 12 to 13%. So I put in 13%, and I put in the mean PE ratio of 31 times, although I still believe it's a little bit elevated for the kind of growth the Estee Lauder has. But I just used the mean kind of PE ratio and their 1.7% dividend. Using these numbers, I got 69% on the upside, or 11% compounded every single year for the next 5 years. This is not a bad return at all, especially compared with the average return of 8% for the S&P. But if I personally want to safely double my money over the next 5 years, I would have to buy Estee Lauder at $132 per share. I know this is lower than my previous price target. My previous price target was around $162 per share. Now it's much lower than the 162. By using my updated valuation model, and I used lower kind of growth, and I also used lower net income margin because I have a lot of uncertainty around the guidance of the company, and they expect another 10 to 12% decline next quarter. So I don't see a lot of certainty with any of those assumptions, so I had to lower them just to be on the safe side. And I personally believe around the $132 per share for Estee Lauder is going to be amazing. I'm not sure if it's going there. This is below the pre-COVID lows. I mean, it would be crazy, but it could happen. It happened with Disney. Although it's not a good comparison, but I mean, it happened with a lot of other stocks that are facing short-term temporary problems. But I personally believe if you have like a 10 or 15 kind of year horizon, I don't believe Estee Lauder is bad at such prices. I'm just being honest. But if I'm more of a bargain hunter, if I want to get some kind of a margin of safety, I would personally not look at Estee Lauder above something like $140 per share. And if I had to buy it at $140, I would buy a small position and dollar cost average down. But this is just me. It's not financial advice, of course. And I hope you enjoyed this video. Thank you for watching. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.